You are amazing for making it here. This is my monthly stocks crypto update where I give you my own interpretation of the market as well as looking at some stats in terms of some trends and possibly things that you should be thinking about, because looking at these numbers sometimes can be intimidated, annoying, as well as overwhelming, but I try to give you my own take on it. No one ever truly knows exactly what's going to happen with the market. However, there are some patterns that you can quite pay notice to that may repeat itself based on past recurrences that happened before, right? So let's start right in. As we could see where we at right now, this is the Dow futures. It's at around 33,000. NASDAQ futures is around 13,000. It relatively is close to what the actual market is. We're not live right now, so we're not seeing exactly what's happening. So year to date, Dow seems pretty flat. Even though we're looking at the futures, realistically, that's what the numbers are about. I do remember the NASDAQ has definitely seen an increase year to date. A lot of it is due to the increase of the technology sector, which has seen a spike of some of their stocks, right? Let's pay notice here. These are some dividend stocks I've been picking up along the way. One of them is Simon Property. I own none of these, by the way, but these are some things you can look into because their dividends are pretty high, right? They're at 7%. And year to date, how has they been doing? They're down 10%, but realistically, if you have this passive income that keeps coming in, it's cool. Like if a stock like this stays flat and you're getting 7% of your money, it's almost like you're beating keeping your money inside of the bank and getting that 4.5%. I think what the top banks are paying right now for just keeping your money stationary, right? So which is still better. So that's one of them that I saw and I figured I shared it with you. Vornado Realty Trust, year to date, they're down 36%. This is horrible. Doesn't look like they're showing their dividends right now, but I know at one point they were paying out dividends. So let's skip them. Pioneer, they're paying 11%. That is high. That is pretty high. And year to date, they're down 8%, right? These are stocks you definitely wanted to research and look further into. Another one is Luxtreaux Group. Year to date, they're about flat and they're paying about 8%, which is good. And Lumen Technologies. Lumen, I've came across them because they're actually looking for UX designers for some technology that they're working on. So that is my field, my specialty that I do work on. I design softwares, application experiences, a lot for digital products and try to bring them to life and make them very emotionally attached to the people that are actually going to be using them, right? That's what it's the name of it. They're down 54% year to date. That is horrible. But their dividends payout, they're not doing any right now. At one point they were. So let's skip them. I see probably why they probably want to get someone like me because they're trying to revitalize some of their products and such. How have Grayscale is a company that has stocks that are linked to crypto, right? Like you have this large cap digital. I do invest in this. This is a combination of Bitcoin, Litecoin, Ethereum trust that they have, which is their own fund that they have created. Year to date, it's up 64%. It doesn't pay out any dividends. Its market cap is at $99 million. It has a huge growth opportunity, and I'll show you why. As you can see, it peaked $70, right? It's showing you the price up here, $73.45. I can't get to it because it probably was in the span of a day, right? But I'm getting to the top around $58. It shows that this has the potential to reach a 10x value from where it's at right now. I have some of this Bitcoin Cash Trust. I purchased a lot of this like end of last year. Year to date, they're almost doubled from where they were at. And as you could see at its peak, it was at $60, right? So it has the opportunity to be 100 times its value. I went in on this one. And you want to make sure you're investing very conservatively, like put money in things that you know you can hold for a long time and know that you have the tolerance. If it goes down, it goes bad, you can either keep buying more or hold on to it. All these investments I have here, that's exactly what I've done to really bring down my dollar cost average further down. And then I saw a nice return when the year spiked back up around January. I pretty much, because I've been doing that, I've been in a positive now year to date across my retirement, almost in my regular portfolio, and almost in this other portfolio that I have. But most overall, I'm up, right? I'm in the positive, I'm in the green. The oldest retirement account I have, I'm up like more than double because I had it for a long time. I have barely put money into it. It's with a company I used to work for a long time ago that I started that 401k, and then it's just been there, but it's been growing steadily during COVID. I seen a spike when the market went back up to almost 3 times the value from what I originally had at the time. Litecoin Trust, year to date, we're still doubled. And as you can see, at its peak, it was like 300, right? Another one which has the potential to be 100 times the value. And I have quite a bit in here as well. Ethereum Classic, year to date, we're at 75%, so nearly double as well. It did double around this time here, April 18th. And at its peak, it was valued at $67.78. As you can see in the top right corner here, I wish I can highlight it, but you can see it right there. And it has a potential to be like 10 times, right? 10 times the value where it's at. So I have in all these right here that I'm showing you right now, right? This is where you got to look at. And this peak that we're seeing right here, it's going to be a lot more. Like, it's going to be a lot more. Once crypto really comes back to where it's supposed to be, the value of these stocks might hit the thousands, right? Like you can see here, the market cap, it's not showing for this one. Let me see if I can find another one for you. Nope, it's not showing that one. Maybe Litecoin Trust. Yeah, market cap is 70 million. And it was worth 100 times this, about, right? So that would put it at around $7 billion market cap, I would say. Maybe a little under there. The market cap equation is a little complicated, right? It doesn't equate to be exactly that, but it comes close. So you got to think about $7 billion that they're putting inside of this fund is very much a pinch of the $1 trillion crypto was valued at its peak, right? 7 billion, and you're going to have 100 times return on these. So sometimes you got to think about the opportunities that are available in these stocks. These are things I'm holding on. They don't really have any correlation to different things that are going on in the market except for crypto. I'm going to dive into some of these stocks here, but not everything. I came across these along the way recently, like Shopify. I've paid it some mind, but it has been doing really well. Year to date, they're up 73%, which is pretty good. At its peak last time, right, when everything was going crazy, it was at $170. And then I remember they did a market split. I think it was a 5-2-1 because they were pretty high, pretty expensive. Their market cap right now is at $76 billion. This company has huge potential to grow. If you didn't know, but over 60% of the US economy is based on small businesses. So if you think about these large retail chains like Macy's and a lot of people, mom and pop shops that are selling clothes and other e-commerce products, they still hold about 60% of the market. And that's me hypothetically speaking and assuming the ratio is the same thing in the e-commerce space, right? So you got to think about this, and relying on technology like Shopify is very key. So that's one of the key drivers that's going to help Shopify to continue that growth. Small businesses, they come together, they overpower the bigger businesses, right? The ratio is much bigger, but by themselves individually, they're not quite there yet. Those are the indicators you really got to pay attention to when it comes to things like Shopify. Netlist, I've only came across this from a friend I seen posting about this. Year to date, right? They are at 292%. So that is the way you do this math is when it's at 100% it means it's doubled, 200% it tripled, and this is about 300% meaning it quadrupled from its original price, right? And we can see it went from $1.15 to $4.51, which is about right. And their peak during COVID was $8.37. I haven't bought any of this, but I figured I'd go through this with you. Let's read about this company right here so we can do some analysis. So Netlist designs, manufactures, and markets memory subsystem for the server, high-performance computing, and communication markets in the United States and internationally. The company portfolio of proprietary technologies and design techniques includes efficient planar design, alternative packaging techniques, and custom semiconductor logic to deliver memory subsystems, and sells specialty memory modules and flash-based products for use in data center and industrial applications. Because I'm in this space, I'm going to give this to you in like English. So think about hard drives, memory RAM for your computers. Those are kind of the things that this company really engages, which is very crucial and important. The way you correlate that, see what's going on with the whole AI thing that happens. It requires a lot of computing power. This is why NVIDIA stocks are very crucial and important, because a lot of that processing requires that video memory, but also the powerful hard drive, right? You're talking about the solid state, the large RAM, and having all these computers come together and be able to process these things are very key and important. So a company like this is something I'll be interested in. But in terms of, do we invest in this, right? Let's see. They have 100 full-time employees. Where are they based? Let me see if I can find that information. Let's open this up. They are in Irvine, California. These are the executives. Now let's see who are their holders, right? Another way to kind of see if you should play into this and see who are actually holding on to this stock. Financials, we go to holders, show all holders, and it's going to show you top institutional holders. So you have Opus Capital Group, Financial Management Professionals, and Vital Stones Financial. I don't know any of these companies, right? Top mutual fund holders, you got USAA, right? That company. And then you have John Hancock. John Hancock, the only reason I knew about them is because I worked for a company. That's where pretty much they had our retirement account. A lot of the funds that were available were from John Hancock, which was kind of cool to see. The one thing I hate about that is that I feel like it's tied to a relationship for a company to go to a particular management company that handles retirement. And the only funds available are typically from that institution, right? And it kind of sucks because what if they're not exposed to certain stocks or markets that you want to tap into? Then you're stuck to whatever they provide you. So that's a bit of a downfall to that. But anyways, we don't see any like big plays. I was expecting like the Vanguards or the Morgan Stanley or BlackRock, right? I'm not seeing any of that happening. But does this company have a strong outlook? They are in a very crucial space right now. Their market cap is $1 billion. I do see the opportunity for them to explode. And the way I would think about where they can reach is see where NVIDIA is at, right? So let me just do a quick search on NVIDIA real quick. Where's their market cap? $770 billion. So think about if this has the same potential as them, it could reach that same market cap, right? Even at half point, meaning it would have to be triple the price. So at the price that stock was, it's at $4 and change now. Even if it like 300 times, right? You would be pretty wealthy and such. There's still a huge market for it, huge opportunity for it to come up and such. MULN, let's jump into that. Mullen Automotive, right? Market cap is at 185 million. Let's look at their financials to see who is still holding on to this one right here. Institutional investors, that is, right? Vanguard is still in with 3 million shares. BlackRock is still at 3 million shares around that point. Northern Trust, another big player. T. Rowe Price has 191. Bank of NY Mellon, they have 175. Charles Schwab and Morgan Stanley, right? Pretty much all the big daddies, they are all inside of this fund. So for me, that's the only reason why I'm still in it. I look at this as a risky stock, but I feel like if they're in it, like there's something they must believe in this for it to really happen. Let's read about them real quick. They're an electric vehicle company. That's pretty much why I did invest in them, is because they're in the EV space. The EV space has so much growth to do. One of the things you got to think about is in California, by 2035, I believe that all their cars have to be electric. You cannot drive on a California road if you don't have an EV, right? So it's going to force people to do that switch and can't rely on gas cars. So a huge opportunity there. If you think about it in the long run, we are in 2023 right now. That means we're 12 years away. 12 years away, right? That means if you do it now and the market explodes like crazy, not only inflation is going to get worse, right? The dollar is going to be so much deflated that you're going to need a lot much more money, which is what's going to make these stock prices go further higher up. Because remember, the dollar depreciates, but the stock value does not, right? What happens is, as we've seen a lot of these sell-offs are happening, the stock prices are coming down. These are actual assets that are not going anywhere. These are things that have a limited supply of, until, of course, some of these companies, they are able to go back to the FTC and figure out a way to get more shares and make it this like unlimited dilution so they can have more shares available for investors. However, the people that, when they're doing these splits, right, you still have the same value of your shares are still pretty much the same. So if a stock did a 4-to-1 split and the original you had $100 worth, when that split happens, you will still have $100 shares. It's either you have more shares, if it's a 4-to-1 split, meaning that 4 shares will now become 1, your value of your shares will become more, but the value per share is going to be more. However, the total value that you have will still be the same. But if it's a 1-to-4 split, meaning that 1 share is going to be split into 4, that means 1 share would now be a quarter of its original value, but you will still have your same $100 worth of shares, right? So that's how you got to look at it. And when these things happen, you still have the same value. Remember, people got to eventually come back with all the cash that they've been sitting on. A lot of people are either pulling out, selling shares of things, right? It's creating opportunities for people to get wealthy, because you're going to get to a point where the dollar is going to be receive that inflation. It's going to be devalued. And they're all going to have to keep running back in, because the only thing that's going to keep appreciating are these stocks, right? As well as real estate. Like, that's why we see real estate doesn't really go down, because it's one of those assets. When it creates cash flows, you got the depreciation that you get from the IRS if you're using it as partially rental. And also you have the equity of it that keeps going up as values of home keeps on increasing. That's why it's very key and important you have assets like this. That's my transitional model right now, is for me to get the next acquisitions. Right now I'm still on number one. So don't feel bad if you're either on your first or haven't got to your first yet. I've been poking around the market for the past 4 years in terms of finding another thing, but my focus right now is to find that next property to really keep that cash flow going, so that way when these market opportunities are coming, my cash is stable and ready to dive in. And what I do a lot with the security deposits that I do have with the real estates is I invest it, and I do a profit sharing model with everyone that I inhabit, because I feel like if I'm able to gain from what you have given, you should be able to gain from it as well, right? Playing that greedy game is not good. This is how God has really made the world for us to be. When we share with one another what we have, we tend to receive more. We've seen that happen countless times inside of the scriptures, right? Inside of the Bible. And the same rules apply when it comes to investing. You start playing in the field and sharing with others what you're able to gain. Don't be selfish about it, right? Share with others as well, especially if you're utilizing their own resources to be able to do it. It's called a great partnership and a win-win situation. I encourage you to try that and do so. But back to Mullen Automotive. Long-term wise, yes, I think it's a good long-term hold. However, they're doing terrible, right? Year to date, they're down 85%. Dollar cost averaging by a whole lot. They peaked at, where we've seen, $502, right? Actually, even further than that. In 2012, they were at 15,000. Realistically, they were probably not at 15,000. They probably did a lot of splits along the way. Remember that whole stock split I was telling you about? So they probably kept on doing 4 to 1 splits, meaning like they had 100 shares turned into 10 shares in order for the value to really be that high. But it's not really realistic, right? But it does show you the potential of where it has capable of reaching from $1 to 15,000. It can 15, yes. It can 15,000x. I mean, it's a great possibility, which would put the market cap in like, I don't know, 100 billion about, right? It would make it huge, maybe, right? So this is one of the things we gotta really pay attention to look at. Meta has been pretty good. It has been pretty stable at its price right now. HiQ did horrible, right? As I said, this is one of those gamble stocks. I think they report earnings this week. I still got to see what's going on inside of their private side. What is it that they're actually doing? As we can see, the market cap depleted to 230,000. Horrible. And I probably own maybe $20 worth of shares. I'm down maybe 90%, but I only put maybe like $200 of investment inside of this, right? If it goes back to its normal price, my $200, let me just do a quick month recap. If it goes back to, what was it at before, right? $1, right? That's like, let me see, 1, 2, 3, 100 times its value. So my 200 is going to be worth 20,000. Is that correct? Add 2 zeros. 2, 3. Yeah, about 20,000, which would be pretty cool, right? We would see what would happen across the board and such. But I might dip some more because, yeah. Let's keep going. Beyond Meat is a company I'm holding because I am vegan, of course. They make no soy products, which I like, and their stuff tastes good. I pretty much eat them all the time. Not every day, of course, because they do have some stuff in there which I question at times. I try to stay as natural as possible, but they're closest in terms of some of the products that I like, with a lot of proteins for me as a vegan. So that's why I'm investing in it. You also got to invest in things that you truly believe in. Their peak was at $240. I think I purchased $1,000 worth of shares for the long term. Law, right? The company's called CS Disco. Pretty much just broke positive. I dipped down when it peaked down to about $4. I think, let me see, around right here, I bought some more. It was like $5. I bought some more around right there. And let's look at the 6-month mark. Yeah, I just kept on dollar cost averaging down, and I think I just broke positive last week in terms of my, from my original, like, total average investment inside of them. HSDT, I don't know what's going on with them. Right, year to date, they down 50%. Market cap is at 4 million, not that high completely. And let me see who still has shares in this, right? Let's see if the big players still hold a lot of shares. It seems like they do. BlackRock, Northern Trust, UBS. Yeah, a lot of the big daddies still hold quite a bit. And I'm just going to hold on to these, right, until we can see exactly what happens. That's just that. X paying, they're pretty much flat. I'm not paying it any mind, right? When it goes back to its normal price right here, like when it peaks $75 about, will I sell? I doubt it, because typically when these things come back up, they come back higher than their last peaks, right? With these market swings. Jeremiah has been steadily staying a little under $3. It has been the same thing for the past, right, since like March, as we could see, till now. For the past 3 months, it's been around this mark, like around leveraging around the $3. I definitely should be buying some more right now. And its peak, as we've seen, let me do max actually so we could see. It was around $70. So it has the potential to be about, what is that? 15 times? No, 15 would be 45. 25 times its value. So if you put $1,000 in now, it's going to be 25,000 pretty much, right? 25 times your value. So which is pretty cool. Square, I'm waiting for it to get under $50, then I'll dip my toes in there. And then we got Riot, of course, with crypto going crazy. It's doing good as well. Like Riot, I still have my original shares. I am gonna buy some more, I believe. But yeah, I mean, I should have bought in January. I just wasn't focused around then, because most of my Riot investments is inside of my HSA account, health savings account. If you don't know what that is, it's another asset you should, asset holding place that you have, right? Portfolio that you should have. What's important about it is that you can purchase things at the store, right? Not only do you get the tax deduction for the contributions that you make into it, but the things you purchase at the store for it, you don't pay any taxes on it, right? But don't think it's anything that you want, right? It's really medically related. So if you got medicine that you have to buy from like the pharmacy, right, that you know you got to use to take care of yourself, then those things is what you use with HSA card. But not just anything that you want to freely, really just go out crazy on. Netflix has been doing good. So I did a short about this. The reason that they really spiked up last week is because investors were happy with the fact that their whole ad tier has seen some growth, and it seems very promising, right? They have 5 million subscribers right now in their ad tier. Imagine them growing that even further and further. And I don't know if they have a thought about tapping into the live TV space. I'm currently using Hulu with the live ad, which is owned by Disney, for my normal TV, and I kept my Netflix. The Hulu one is cost me about $90 per month, right? And then Netflix is about $21 right now, so huge price difference. But Hulu is paying a lot of, I'm sure, fees to these other cable networks. And I'm sure Netflix is paying fees to the shows that it's hosting on some of its platform that is not original. But I do think they have a huge opportunity, like tapping into the whole ad space, right? Allow ads to be shown because it can increase revenue. You're providing advertisers another opportunity to be able to showcase to different audiences. And they've been learning about their viewers for all these years now with this machine learning technology that they use to be able to tell you, you should watch this show, you should watch that show. So based on all these things, they can definitely recommend things that to you, right? Based on those preferences, what advertisement that can be showcased to you. So we've seen there's a huge opportunity there for it to grow. And then Lab is the last stock I'm gonna showcase about. What's been going on with this year to date? We've seen that they've pretty much doubled. I strongly believe in them. So they had an announcement last week. This is all gibberish to me, by the way. I'll be completely honest with you in terms of this, but investors liked it. It was good news. I do long-term believe in this company, one, because of their cancer capabilities, technologies that they have. Even during COVID, they had the whole testing, right, that you could do. They didn't do super great in it, but it's a market that they actually tapped into. They brought some revenue from that. And another thing, let's look at the financials as well, right? So I know they haven't been doing really super great within the past like few years. They're still not reporting a profit, but they're getting close. Right, look at Q4 2022. They were down 20 million. They reported a loss of 20 million. And then annually of 2022, it's horrible, 175 million. Right, they haven't really reported profit in a minute. But we've seen that they're going towards closer to the positive trends. And I don't think this is going to show me the EPS. Look like it's not. Okay, so we don't have to worry about that. But in terms of their holders, I always try to see who is still holding on to them. So Callaghan Partners, any big name here is Vanguard and Morgan Stanley. I was shocked to see that. And BlackRock too, because I didn't think they would actually look for a company like this to hold on shares to. But I'm glad I made that call. And it looked like the date that it was reported. Oh, this is percent out. Oh yeah, percent out. That's what that means. So they have 3 million shares and such. So that's pretty cool to see all that, right? So long term wise, this is what I'm really banking on. HIMS has been steadily going up. I've seen it happening, right? They're up 52%. They're doing good from what I've seen in terms of their financials. They're getting closer and closer to reporting more on the positive side. As we can see, the last quarter, they barely had a loss, right? They were close to being positive. If I had to guess, this is probably like a $10 million loss. But I do see them really reaching that point where they could make their investors like really happy. eHealth as well, they're up 66%. I think they're normal. For me, their target price is around $60, but I'm still going to hold on to it at that point. They peaked at $152 last time. And as I said, whatever peak these companies reached last time, if they're a good company doing good business, they're going to reach higher than that on the next bull run that we are going to see. But in terms of crypto, Binance, $300. Average price means it's flatline to me. When we really got to see the signal for when this is going to pop off, you see it's leveraging around $300 mark. When it gets really past this point right here, the minute it passed this 690 mark, right close to 700, you know that crypto is about to really take off, and you really got to pay attention to the market. Like, this is your opportunity right now to really get in, stay in, and do not touch that money, right? Just really do not at all. What else do we have? Terra. Market cap is still at 522 million, which is pretty amazing. I have some of these. I think I bought around 0.0002. So right now I'm up 4 times, about close to 5 times my investment. Litecoin is where I actually held a lot of my gains that I made profit-wise from crypto back in 2021, and I pretty much held it in there. So right now, if I was to sell, it would be at a loss, of course, but if it was to ever profit again, I'll be paying the long-term capital gains tax because I've held it for over a year. That is what I'm doing with all these funds. I've pretty much learned my lesson from 2021, right? We went crazy. We made a lot of profit and gains. I did some things, but it was such a huge headache from a taxation standpoint that I honestly do not want to repeat that again. So I'm all about the long-term capital gains now and holding on to things for until the whole bull market happens. And then I'm going to get rid of the losers, keep the winners, of course, and then sell what I need to sell or leverage it if I need to leverage it. But I never plan on selling everything because then you're going to convert everything to cash and then it makes no sense. You should just take what you need to turn it into some sustainable investment like real estate, right? That's going to cash flow. You get the depreciation off of it and such, and then you move on from that point on. That's what I strongly encourage you to do so. But if you see crypto right here does another drop where, for example, I'm going to give you a use case, right? Let's look at Matic. It went down to like 38 cents back in June of last year. If you ever see that price again, dip in as much as you can. Of course, again, I'm an entertainment channel, so I can't really provide you financial advice. This is something you speak to and do your own analysis and research on, but this is what I'm going to do, right? Whether you do that, that's totally up to you. It's your choice. I possess no risk of that. You do all these investments at your own risk and everything. So that's pretty much the state of stocks in crypto right now. Realistically speaking, where do I see the economy is right now? We are in a weird state. I was reading this article about how a lot of Gen Zs, which is the generation that is younger than me, I'm considered a millennial, born 1990, they are selling a lot of stocks for everyday needs, which is sad. Like about a third of them, right? Your investments are long term. You're supposed to be holding on to these and not touching them. You got to think about it as kind of like your savings account, your emergency fund kind of thing, right? You stash it away, leave it there and forget it. Wait for the bull run to happen. Then you can liquidate some to buy into an investment that's going to cash flow or to be much more steady. And I always find real estate to be that perfect one. Out of all the other things I can see, starting a business, yeah, you could do that too and such. Or even a mutual fund. If you did not want to go and buy real estate and you wanted the stream of investment to stay steady, you could have did mutual funds as well. right? Put into these things, because when the market bottom out, one of them I recommend is two of them actually: Investco Technology Fund and Ariel Fund Investment. They are black owned, but they've been doing pretty well compared to the rest of the market for the past 5 years. We've seen they peak around $90, but they didn't have that huge drop like a lot of these other companies done, right? So they dropped by about a third, 33%, compared to Investco from its peak of like about the same, right? Like $80, it's down about 50%. But that's because a lot of the tech sector been battered. But I think they're going to outpace Ariel because they're in the technology space, right? Unless Ariel has some exposure to some of these tech funds that it's also investing in. But that's one thing you can do as well. But the fact that that's what's going on right now, don't do that. I strongly encourage you, of course, you want to be wise about your investment, but don't sell out of panic. Really be patient to what's going on in the market. Don't go crazy. There's a bunch of news out there, and I know I'm probably adding fuel to the fire, telling you all these state of things, but do not go crazy. I'm not buying and selling every day, right? If anything, I'm just buying. I haven't sold any shares last week. When I did taxes last month and I finalized my taxes, I literally only had like maybe $80 or $150 in total of interest that I earned accrued, and that's from some of the cash that was sitting there, as well as stock lending that I did in Robinhood, right? I didn't really sell anything. That's the only money that I made, and I encourage you to really think about that. I'm staking all my crypto right now. Yes, I'm down by quite a bit, but at the same time, I have some crypto I bought in 2018 when things were way up. And looking at the prices of Ethereum when I was averaging $800, I thought that was crazy. Now Ethereum is like $2,000. I'm up more than twice, right? Almost 3 times the value, and it's in a downtrend right now. So this is how you got to look at these investments from a long term. The bad that we see here now, right, is going to be nothing to compare to the grace that you're going to see down the line. And the peaks that you're buying, some things that you have bought within the past 2 years, 5-10 years from now, you're not going to see them as the peaks. They're going to seem like such low numbers right now compared to where you're going to look at it. And I can testify against that because that's what I'm seeing now from a lot of investments that I did back in 2018, right, 2019 and such, before things really got high during the pandemic. We hit a low at one point and we came back up. So really try to not go crazy with the market, the news. Don't pay attention to so many things in the media. Do these analysis like I'm showing you right now, where you go inside of these companies, right? This app is free on Yahoo Finance. Neither am I sponsored by them in any way, shape, or form, have been paid by them. But they're just one of the resources you could do. Look at the company itself, like Amazon, boom. Read about the company and what it's doing. Do you believe in that and everything that it's doing, what it stands for, right? And then you got this analysis tab that's happening where you can actually see what are people, are they recommending that you buy this, you sell this and everything, right? Of course, most of these stocks you're going to see either strong buy or hold, but look at the financials yourself. Like, are they doing good? Look at their performance, right? Look, for example, see Amazon come up, they've still been positive, but in 2022, it looks like they reported a slight loss. It's a slight profit or slight loss. But from a quarterly standpoint, they're positive Q3 of 2022. They're flat Q4 2022, and they're positive Q1 2023. These are things you got to make your own judgment on. Their EPS, they keep beating it over and over. They're in an upward trend, right? They had a negative in Q2 2022, as we've seen, because their revenue compared to their cost was down, right? They were net negative. And in Q4 2022, they didn't do that good. So these things you can analyze yourself to see how strong of a balance sheet does the company have, right? Even if you did not want to go through their full financial report, these are some quick analyses that you can do to determine whether this is a good choice for you or not. But be smart, be intelligent, be patient. Those who will really prevail, like after all this is done and said with the inflation and everything, are people who are very conservative about their money. Don't spend recklessly. Save as much as you can. Focus on your essentials, right? Your groceries that you gotta do. You gotta eat, put food on your table. If there's any educational content that you have to do and purchase, you do that. But in terms of trying to live lavishly right now, try to be much more conservative. And if you're looking for real estate, I encourage you, instead of buying that luxurious home, single family that you really want, look into multifamily where you can rent out portion and then stay in one. Maybe you shouldn't do the 20% down. Maybe you do the FHA 3.5% down. That's something you got to speak with your accountant and your financial advisor to figure out which one is best for you, right? But if you did the 3.5% down, you have more cash and you could use that to do some investments, or you could do the 20% down. If you're not into investments as much, you save on the interest in the long run. These are things you got to really analyze and think about, because what you do right now will determine where you be, because there's going to be no in between, right? You're either going to be up there with the people that are wealthy or super wealthy, of course, or you're going to be down here, kind of be the ones that are underneath. The in between, there's really no such thing, I feel, right now in America that really exists. Like, I don't really see any middle age American. You're either on that top bracket or you're right and below. And it's a little sad, of course, but one thing I try to do is encourage those around me to think about investments, make some sacrifices now, because in 5 years from now, we're really going to see that truth really comes out. The economy is stated to be bad, and I'm not saying it's not, because the debt ceiling, the whole feud that the Democrats, Republicans are having right now, it's adding a lot of fuel to the fire, and things we don't know where they're going to be, right? There's a presidential debate happening. I don't really trust Democrats in terms of a lot of things that they are doing, even though that's what I last voted, but a lot of financial decisions, I'm not Democratic in that sense. What I really for them for is some of the values for immigrants, right, that they provide for people of different kinds, different ethnicities. Like, they are very, when it comes to that, that's what they really focus on, right? They're trying to do for the majority of the people, the health care plans that they have to provide. But when it comes to spending and financial decisions, Republicans blow them out the water. Like, they're much smarter in that sense. I have not seen yet, and I really have been more into like politics and everything with the financials within the past, I would say like 5-6 years, really heavier into it, right? So those are some of the things that you got to really think about, and those long terms are key, crucial, and important. Do your due diligence. Read up on things. We have access to a lot much more information now than we ever had before, thanks to YouTube, of course. And I'm one of those that's spitting out more information to you, which I hope that you take in and find inspiration in. But I really want all of us to succeed, especially those of us who are these black minorities, because we are always the ones left behind. If you think about it, we are the real backbones of this country, because a lot of the consumer spending that happens is from us. It's really sad, but we don't own nothing. We own squat, right? And this is where we can flip things around. The people that control and own all these things, we're paying them to use the stuff that they own, and we have the power to do it, because we're the one that's really actually holding on to the money. So your pension, your retirement funds, and all these things that you have, you keep pumping money into it, right? Look at the investments that it's allocated to. I mean, I wish I can provide like further advice, but if you are curious about that stuff, if you have questions about it, feel free to drop a comment below, and I can see how I can help you, because a lot of times the limited funds that they provide you to are not things that's going to make you wealthy in the long run, right? I'm blessed, thankful enough that God has provided me this wisdom that I'm able to share with you, because I don't think it came to me because I've been studying in books and all this stuff. This is like God has instilled this to me. Numbers, I look at numbers and I can, for some reason, and not do some analysis on numbers, and it makes sense to me. It's almost like I can understand numbers language, and I was able to look at the funds that were available, do analysis, look at trends and patterns, and I put a story together and figure out which investments that I was able to allocate my retirement to. And let me tell you, that one retirement account that I had from this job from years ago, right? I probably put in about 40 in, and at peak of COVID, it was almost at 120, right? 120,000, which is almost 3 times the value. And it's not because I'm this intelligent. This is really, truly a God-given wisdom that He had imposed on my life, and I was able to make that decision. And I'm hoping you're able to do the same. And if I can help in any way, shape, or form, please drop a comment below, and we can communicate and connect, because although I'm not a licensed financial advisor and such, I can just put a little birdie in your ears to have you think about things differently. You still got to make that choice on your own at the end of the day. And I'm just trying to make you aware of options out there. You can be wealthy off your pension plans, your retirement, your 401k. They're not evil. You just got to know what to put towards. If you want to be in the conservative side, doing the bonds and all this stuff, right? Money market, that's not really, to me, the way that you're really going to be wealthy. And you got to take some risk in order for you to really see that gain. Of course, if you're older, you have a pile of cash. I'm talking about millions already. You're going to go for more of the conservative route, because honestly, if you can make 3-4% of your money, you'll be good, right? But unfortunately, you're not beating inflation. So you want to try to hit that 10% mark as much as you can. And that's what you really try to shoot for. And during like low times like this is the best time to getting into some investments that are cheap. Some of these mutual funds that are available inside of your pension plans and index funds, great time to contribute more into it, right? Put more into it. So that way, 5 years from now, I hope that you thank me for what you're going to experience and see. So hope you found all this insightful. I really try to do my best, not just gave you analysis from the market, but from the heart in terms of what's going on, because a lot of these news media can make you go crazy. And truthfully, I've learned to understand the market from not just from a number standpoint, but it's speaking to me, right? It's almost like it's a living thing and it's going through its phases right now, and I can understand it and know I have to kind of ride the wave. So I hope you found everything I stated insightful, useful to you. If you have questions, of course, feel free to share and ask it. Please share this video if you think someone can benefit from this. Subscribe for future content. And any other questions you have, I'll try to answer them. Just drop it in the comments below. So peace and love. Have an amazing one. I will say trust in Jesus, because that's pretty much when we get all this wealth, this prosperity that we have. It's not for us to keep and retain for ourselves and be all this flashy, but pass on to others and also be able to continue the work that Christ, I think, have done into this world, right? That's why I always allocate at least, I finally, thankfully, just made it to the 20% mark in terms of allocating my gross income, right, from my business into donations, which I'm super grateful for I was able to do in 2022. And I'm trying to increase that percentage every year. And I'm not talking about the amount, I'm talking about the percentage, increase that every single year. So far, they've been correlating. Both the amount and percentage have been increased. But those are the things to me that is so rewarding, more than the actual wealth that I'm able to inherit themselves. So that's why I always say trust in Jesus, because we learn to not be greedy, not learn money consume us, but we are controlling the money and everything that's going around with it, because there is a way to stay happy with having all this money and not go crazy as well. Trust in Jesus one more time. All right. Have a great one. And I look forward to see you next time. Peace.